Hi everyone. Just wanted to tackle a few things that happened yesterday. CMHC seems to be on the news a lot the last couple of weeks. So Evan Siddall started off with predicting 9 to 18% price reduction in terms of home prices in Canada, which is significantly more than other economists and prognosticators as far as prices in terms of decreased prices in Canada. And then he's kind of hinted that they may be considering changing the minimum down payment from 5% to 10%. Now, yesterday, 4 points were released that CMHC is changing some of their guidelines with regards to four things. So let me tell you exactly what those four things are and see how that could affect your specific scenario. So number one, they are limiting the gross debt service and total debt service ratios that's being allowed from typically 39 to 44. So 39 GDS, 44 TDS currently today, but starting July 1st, it'll be 35, 42. So less of your income can be used for home-based expenses, and obviously less of your income can cover your total debt. Number two, establish minimum credit score to 680 as opposed to the current minimum of 600 beacon score today. The third thing is non-traditional sources of down payment that increase indebtedness will no longer be treated as equity for insurance purposes. And lastly, this one doesn't necessarily apply to most residential purchases. Refinances on commercial or multi-unit residential properties, as far as that is concerned, can only be used for improvements or repair or purchase of another rental property. So if it's okay with you, we'll tackle the first three in level of importance. So the first thing I'd like to discuss is the borrowed down payment, the elimination of it. So it's been there for quite some time and it hasn't been used quite a bit. And there's a reason for it. Let me give you an example. So let's say you're a first-time home buyer and you make around $80,000 a year. Based on today's rule, it's not even July 1st rule. If you have, if you're thinking about buying a condo, and let's say you have a car loan, and now you don't have access to the 5% down payment, so you have to borrow it. So let's say you have to borrow in around $20,000 of unsecured debt. If you didn't have that borrowed loan, you may be able to get a mortgage of around $345,000, so maybe a purchase price of around $350,000. So that's if you're able to come up with your own 5% minimum down payment. Now, consequently, if you utilize this, basically it's available today, the borrowed down payment scenario, your borrowing amount will go from $345,000 down to $280,000. Now, that is a significant decrease. It's $65,000 less mortgage that you can borrow, significant enough that it's technically 20% of your borrowing capacity. Now, the main reason it's not being used currently, one, it's costing you more as far as premium and interest rates are concerned. Number two, really is the fact that it eliminates or lowers the maximum mortgage capacity you can borrow. So eliminating that after July 1st, taking the borrowed down payment scenario, it really is not going to affect too many people because it's not being used as much today. Second thing I'd like to address is the minimum credit score of 680. So this is a little bit more significant. Now, 600 beacon score was the original bar that we currently have today, and it's going to be moved up to 680. Now, to give you a perspective on what that means. So let's say, you've had a late payment within the last 12 months or two late payments even if the line of credit or credit card product that you may have had is a smaller balance, but if you've had 1 or 2 late payments, it could easily bring your credit score down to 680. Now, one of the things that we need to make sure now is that you're actually keeping track of your credit score. Now, today, Equifax is still offering, during the COVID period of time, they're offering free credit check up to 30 days through the Equifax.ca website. Shameless plug. My personal app, my business app actually has, it's a Mapolo app, has the ability to, if you download it on your phone, has the ability to track your credit score for free. So you can look at it as many times. It's a soft credit hit, and certainly it'll give you a free access to it. If you go on my website, there's a link there, Mapolo app. Put my name on, and you'll be able to do your regular credit check for free. Aside from the credit score being brought up to 680, I think the most significant change that we have to really look at right now is that GDS and TDS change. Now, GDS is gross debt service, so that's basically a portion of your income can be allocated to pay for your shelter costs. So that would be your mortgage, that would be your property tax, half your condo fee, and utilities. So right now you can allocate up to 39% of your income today, but after July 1st, you can only put up to 35% of your income for that purpose. Now there's also the TDS. TDS is a total debt service that accounts for all your home-based expenses that we just talked about, plus any other debts that you may have. So that's the car loan, credit card, student loan, line of credits and such. Those payments, today you can allocate up to 44% of your income to basically account for the home-based expenses and any other debts. Moving forward, July 1st, that's going to go down to 42%. Now, what does that mean? As an example, if your household income, and let's say you're still a first-time home buyer, your household income is around $100,000 a year. Today, you may be able to borrow, let's say you're buying a condo, you may be able to borrow around $486,000 based on that income, assuming that you don't have a whole lot of personal debts, unsecured debts. Now, after July 1st, for that same scenario where you have $100,000 household income with some property tax, let's say half the condo fees and some utilities, your maximum mortgage amount is going down to around $430,000. So that's from $486 to around $430. So that's around $56,000 borrowing capacity difference, which accounts for around 11.5%. So even if you say it's around a little bit over 10%, that's a significant enough amount that it makes a difference. So if you are pre-approved today for a $500,000 mortgage, 10% of that is $50,000. Now you can only borrow $450,000. Now, obviously, we would expect that given that we are in June currently and July 1st is a future date, you're probably going to see a little bit of an influx of current borrowers or current potential buyers today that will try to get in just before that July 1st deadline. Now, as great as it is to know that CMHC is trying to do somewhat of a responsible thing to make sure that our current home buyers are able to afford their property today and moving forward, it does have some negative effects for certain qualified buyers today that may be qualified today but may not be tomorrow. So you may end up having to rent moving forward. Now, as action items, I'd like to share some with you so that you're basically in a scenario where you have a goal and you have something to do to make sure that it gives you the best opportunity to be able to buy today. Now, first and foremost, make sure you're pre-qualified. Now, as soon as you're pre-qualified, obviously, because there's a deadline date of July 1st, if you're able to find a property and get it approved through the lender and CMHC, certainly that commitment can carry you over to closing. Second action item that I'd like to share, make sure you save that 5% as soon as possible. The sooner you get into it, obviously, the less likely that any other future changes will affect you. And as such, if you're able to buy, get into your dream home or at least your first home, you're going to be a home buyer and things will go from there. The third thing I'd like you to consider is monitoring your credit score. Like I said earlier, Equifax.ca is currently offering your credit score report for free today. And you'll have access to it for 30 days. And again, my Mapolo app will give you access to that even after the 30 days. And you can use it as many times as you need to, and it's not going to negatively affect your credit score. Lastly, I really just want to call into, just want to talk to the current first-time home buyers. That's, we're talking about, current millennials and maybe new to Canada. You're probably going to feel this change a lot more than a lot of people. Now, this is predominantly going to affect a lot of the purchasers today, and a lot of the first-time home buyers are going to be affected by this. So I encourage you to reach out to your expert mortgage agent, at least from a perspective of qualifying you today and maybe setting up the stage on what your borrowing prospects are moving forward after July 1st as well. Thank you so much for watching, and I'll talk to you soon.